get some reaction to Moynihan's comments from Jonathan Finger. Jonathan is managing partner at Finger Interests, which holds 1.1 million shares of Bank of America. He helped lead a shareholder revolt that stripped Ken Lewis of the chairman's title back in April. And John joins us now. John, you have said in the past that Brian Moynihan is not a change agent at Bank of America. Moynihan didn't say a whole lot to change that opinion yesterday. Tell me, what was your reaction to what you heard?
Well, I think we were, it's sort of what I expected. We were disappointed. You're right. I don't think he is an agent for change. You know, he said we're just going to execute. You know, to me that says they're not going to review the business lines that they have in place and not going to figure out the best place to allocate capital. Instead, they're going to continue to do what they've been doing, which has been a very negative strategy for shareholders.
Okay, well, it has been a negative strategy for shareholders, but Ken Lewis built quite a business. Not just the old North Carolina National Bank plus Bank of America. He's got Fleet Boston. He's got MBNA. He's got U.S. Trust, Merrill Lynch, Countrywide. The pieces of potentially a great financial empire. What's wrong in principle with just taking those and doing the job right?
Well, I mean, he built that business by destroying a lot of shareholder value. The Merrill Lynch transaction and the Countrywide transaction were not only dilutive to shareholders, but took on a lot of risk. And this is a board and a management team that doesn't look at risk-reward or hasn't in the past. And that's what I'd like them to do. I'd like them to take a look at risk-reward and figure out what are the right businesses for them to be in, what are the best places for them to allocate capital, and where can they get the best return on equity. And I'm not hearing Brian say that. I'm hearing Brian say we're just going to take the strategy of being big and continue to do what we're doing.
Hey, Jonathan, this is Bill Cohan here in New York. Are you concerned as a major investor at BofA at all of what the SEC might have in store for, you know, Brian Moynihan as he and BofA as he leads this company? I mean, it seems like an odd choice from that perspective, you know, hanging out there with that SEC investigation.
Absolutely. I mean, that's something we pointed out in our SEC filings and our communications to shareholders. I'm not sure how the board is comfortable that Brian is not going to somehow be implicated in the SEC investigation. There's a trial coming up in February in Judge Rakoff's court. So there's a lot of investigations and questions that are still unanswered.
Jonathan, let's talk for a bit about Moynihan's view of the credit cycle in the economy. He said he thought that the worst was behind Bank of America when it came to things like credit card charge-offs. You've been critical of the company and its record with credit cards. They have one of the highest charge-off rates in the industry, certainly for a bank of their size. Are you concerned about his economic outlook? Do you think he's too optimistic?
You know, I think he's probably right that the peak in consumer credit losses has probably occurred and will start to trend down. At the same time, you know, they need to turn the credit card business around. They took a great business, MBNA, which was a Cadillac business, and turned it into a subprime credit card business through adverse selection and a push for growth. And so they need to articulate a strategy on how they intend to turn the credit card business around. So I think there needs to be a little more clarification on what they're going to do going forward.
You've been critical of Bank of America and the former CEO, Ken Lewis. Now, of course, we're talking about Brian Moynihan. What was the most encouraging thing you heard from Moynihan yesterday? He did, after all, have a lot to say.
Well, you know, he does bring an insider's view of the company. He does know a lot of people there. I think he will bring a lot of energy to the to the CEO position. I'd very much like for him to be more independent and understand that his loyalties are not to Ken Lewis, but are to shareholders. And I think that's a message that I'd like to hear him articulate better.
But with Ken Lewis now off the board, do you perceive Moynihan's loyalties to be to Ken Lewis, or is it just to the board that appointed him as CEO?
Well, I mean, if you watch the video of the employee meeting where Ken Lewis sort of handed off the baton to Brian, Brian told employees, we have this opportunity to execute Ken's strategy. You know, I think they have an obligation to shareholders to look at every business line and determine the best place to allocate resources, the best place to allocate capital, and determine where they get the best return on equity and the best return to shareholders. That's where his loyalties need to lie.
Well, I mean, Jonathan, I agree with you. They've got you know, a great bunch of assets, but you know, to your point, he is beholden, I think, to some degree to that board that selected him. He comes out of that Boston mafia, if you will, that appointed him. Is he going to show the kind of independence that's needed to rationally and quickly pare down the assets that they've got and focus?
That's a very good question. I hope that he will. I hope he will also strengthen the management team and give people autonomy so that they can attract the best people. That's a critical issue.
Jonathan, I'm afraid we have to leave it there. That is Jonathan Finger. We're talking about Brian Moynihan and B of A. We'll be back with more on Apple, folks. Stay tuned.